Moving averages are some of the most widely used trend-following tools available. If you're a fan of incorporating moving averages into your trading strategies, this video is right up your alley. I'll be introducing a dynamic trading indicator that transforms 11 different types of moving averages into a powerful oscillator. This tool offers valuable insights into market trends and volatility, helping you make your analysis more efficient and precise. If you find value in this video, don't forget to leave a like. Now, let's dive in. To get started with this indicator, head over to TradingView and open any trading asset you prefer, on any time frame. For this demonstration, I'll be using the 1-hour time frame with GBP USD. Next, click on Indicators and search for Moving Average Zcore Suite. Look for the one created by this amazing scripter. You might be wondering, what exactly is this indicator? The Moving Average Zcore Suite, as mentioned earlier, is an advanced technical tool that takes 11 different types of moving averages and transforms them into a Z-score oscillator. But what is a Z-score? Simply put, a Z-score of 1 means the value is one standard deviation above the mean, while a Z-score of -1 indicates it's one standard deviation below the mean. Unlike standard moving averages, this tool quantifies values in this statistical manner. Let's explore its components. In the Input tab, you'll see a drop-down labeled Moving Average Type. This lets you choose from 11 different moving average types: Simple Moving Average, Hull Moving Average, Exponential Moving Average, Weighted Moving Average, Double Exponential Moving Average, Running Moving Average, Linear Regression Curve, Triple Exponential Moving Average, Arnaud-Legoux Moving Average, Kalman-Hull Moving Average, and T3 Moving Average. Each one has unique characteristics and reacts differently to price changes, allowing you to select the best fit for your strategy. For this example, I'll use the Hull Moving Average. Now, let's break down the histogram. This is the Z-score histogram, displaying standard deviation levels from -4 to 4. Whenever the histogram crosses these levels, it signals that your chosen moving average is deviating significantly from its mean. For instance, if the histogram moves beyond +3, it indicates the Hull moving average is far above its mean by 3 standard deviations, signaling a potential overbought condition. Similarly, if it drops below -3, it suggests an oversold market. In the input settings, you'll also find an option to show divergences. Enabling this feature highlights bearish and bullish divergences. The first strategy we'll explore uses these divergences. When a bearish divergence appears, don't immediately take a short trade. Instead, wait for a break below the most recent swing low to confirm a market structure shift. For example, in this scenario, we spot a bearish divergence, and after the price breaks the swing low, we place a short position. Set the stop loss above the swing high and aim for a 1.5 to 1 risk-to-reward ratio. This trade turns out profitable. To go long, simply reverse these steps.
Welcome aboard our crypto arc, where dreams meet freedom. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy 0 fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Join Bybit today and ride the wave of crypto success.
The second strategy involves identifying overbought and oversold conditions. As mentioned earlier, the red zone at the top marks overbought levels. When the histogram enters this zone, wait for a short signal from the PT Market Beacon indicator. Add this to your chart to see long and short signals. After an overbought condition, look for a short signal. The histogram must then turn red before entering a short trade. To improve accuracy, limit the signal wait time to 20 candles. Here's a long trade example. Condition 1. Wait for the red histogram to touch the oversold green zone. Once it closes above the level, track the first bar that meets this condition. Use the date and price range tool to count candles, setting a 20-candle limit. In this example, the long signal appears after 15 candles, making it valid. Now, wait for the histogram to turn green. Again, count up to 20 candles. If it doesn't turn green, the trade is invalid. Here it turns green after 5 candles, confirming the entry. Place your stop loss below the recent swing low and set the profit target at 1.5 times the risk. This trade also proves successful. In summary, the moving average Z-Score suite is a versatile indicator that blends multiple moving averages with statistical analysis, highlighting market trends and pinpointing overbought and oversold conditions. If you'd like to try it, you can find it on TradingView. You can also turn it into a fully automated bot with alerts by watching the recommended videos on your screen, plus more. Please remember, this video is not financial advice. Thanks for watching, and see you next time.